Hey harvesters, and welcome to the channel where we run simple and straightforward options trading. My name is Matt. In today's video, I'm going to talk about three things. I'm going to talk about the trades I executed for December 2nd. Then we're going to talk about the project State of the Union over the last 162 trading days. And lastly, I'm going to talk about the trades I plan on doing for tomorrow, December 3rd. Let's get the ball rolling. Today was a nice green day in the market. I made about $1,622. Most of that money came from an option I actually bought, a week ago, the Meta buy option. Bought it for $5,900, sold it for about $7,400. So made a pretty substantial gain. That's where most of my profit came from today. But you guys know me. The first thing I like to talk about on my channel is my Robinhood portfolio from the Robinhood screen. Currently, it's at $225,355.57. I'm going to take this number, throw it into spreadsheets so that you guys know exactly where that number is coming from. So let's head over to the Excel. All right, guys, now that we are at the Excel spreadsheet for December 2nd, let's get into it. The first 5 covered calls, there really isn't much I can talk about. We have 300 shares of Tesla, 200 shares of QQQ. All of these are week-long options, and I ran them yesterday, so there isn't anything I can do except monitor and track the change in the prices. The first thing I did this morning for December 2nd is I closed out a buy call. And for anyone that follows my channel, I don't like to run buy options at all, or it's a very small percentage of my portfolio. I would say somewhere between 5 and 10%. And it really just depends on the timing and the opportunity. I'm not forcing a buy, or I'm not specifically looking for anything. I'm looking for a great value play. And that's what I saw in Meta. Meta dropped down to 590s. And then I scooped up this buy option at the 613 price range. Now it's trading at the 643. The initial strike price I chose was a 650. I bagged $1,439 of profit from that option. Bought in at the 5,961, sold it at $7,400. So that was a quick, nice, week-long option that netted me about 25% based off of my investment in it. So that was super good. It doesn't happen often, but when it does feel nice. But then it gets into that, feeling of greed where it's like, oh, I could be making way more money if I just do buying options. But guess what? It's a lot more risky. There's a lot more potential return, but there's also a lot more potential downside. So I like to limit it for good value plays. For December 2nd, I did run 2 cash secured puts. You can also replace the word cash for collateral secured puts. So the way that Robinhood operates is it uses your cash value to then you be able to run these options and not incur cost for them. So what does this mean? I ran a cash secured put on the QQQ. The QQQ opened at the 619.40, closed today at the 622.07. I chose a strike price of the 621. It didn't get close to getting assigned away, or getting assigned, which meant I would have to buy 100 shares. I bagged $73 of premium, didn't incur any cost to myself. Now let's talk about the SPY. Similar situation, bagged about $54 of premium, chose the 681 strike price. Market opened at the 681.80 and closed at the 681.48. Both of them expired worthless, bagged, that $54. And let's do that thought exercise from yesterday. Let's pull out a calculator and let's talk about, what an additional, $73 and $54 a day can look like. That's $127 a day. And when you look at it at face value, it's like, man, $127 isn't anything nowadays with inflation and the cost of living for everything. But guess what? If you stay consistent over a year period, this $127 is now $31,750. So what did I do? I took $127, multiplied it by 250, because every year there's about 250 to about 252 trading days a year. It depends on the year, if it's leap year or whatever. But it's roughly about 200 days. So, $31,750. That's a significant amount of money, but it's still not enough to retire on. It's not enough to basically live out of your brokerage. So now imagine you do this for 10 years. 10 years of doing the same boring trade every single day. That's $317,000. Now you're in a different ballpark. Now you're into a range of account where I'm at, where you could be making about $10,000 every single month for the last, at least for me, it was the last 3 months in a row. Now we do that for, 20 or 30 years. 3150 times 30. Guys, before taxes, that's $952,000, and that's a different conversation. So that's the power of compounding small amounts of money over time and consistency, and that's what I'm trying to show on this channel. That 31,750 That's just extra cash on the side, but I still have my main brokerage. I still have all the covered calls I ran on Tesla, QQQ. Add all of that together, guys, we have a recipe for success here. And then I did have another QQQ buy option. So I bought this QQQ option when it was trading around the 613 and the QQQ was on the downward trend. I chose an expiration of like 3 or 4 months away from November. So I chose a 630 strike price and I closed it for about a $56 profit. Initially, I wanted to do a quick, buy into it and then the market was going to rebound, but then it continued to stay red longer than I anticipated. But end of the day, I still locked in profit, $56. It doesn't seem like a lot of money, but going back to my cash secured put side of house, bagging in those little wins every single day, that matters. That matters in the long run. And then lastly, I have a year-long leap on FISV. This was more so, this isn't a stock I really know too much about. This is going to sound terrible, but I did see it drop 40% and just a little research I did do on it. It is a market leader in certain aspects of the financial services. So I decided, hey, went down 40%. It only could really go up from here unless the company botched a lot of financials, which I think it sounds like they did, but I think with new leadership, this company can turn around. It was only a $2,000 option, and that option is close to my strike price of this $65. Was at like 67. I should have cashed out at that point, but then, with the red November, everything kind of went the opposite direction. Currently, that's active. So right now, my only buy option is FISV. I don't recommend going into it. This is more for speculation and just wanting to have some sort of, buy option for me. Otherwise, I would say 95 to 98% stay true to the covered calls and the cash secured, collateral secured puts. Cool, guys. Now let's head over to the other side of the spreadsheet and talk about the project State of the Union. All right, guys, this is the favorite part to my videos. We're talking about the project overview. So looking at December 2nd, we have already touched on a couple of key points. We already mentioned that we made $1,622 today. The account was at an all-time high at $225,376.25. And that is a 47% return, almost a 48% return based off my initial investment of about $152,000. So we're doing quite well for 2025. Looking at my trade win percentage, we're winning 98.77% of my trades. We had 160 winning days, 2 losing days, and I will say this every time we talk about it. It was chalked up to investor inexperience with rolling options, and I have a day job, so I couldn't track the market at the entire time. So there it is, hard truth. And some of the metrics I like to track are some of my averages between daily, weekly, monthly. So the average amount of premium I am generating per day is about $475.04. If you look at that as a weekly average, I'm averaging $2,263.45. And looking at that as a monthly, we're making about $9,206.15, guys. That average is more than my day job. And I'm doing it trading, somewhere between 5 and 15 minutes every single morning. So I don't know. This is definitely the future here. For 2025, I wasn't going to trade for a full calendar year because I was invested into high income ETFs. And then, 3 months after, the year started, I sold out and then started running my own options. And basically what I did is from April. So what I did is to project out some returns for a 12-month calendar period. I took the average weekly premium, multiplied it by 52, so that we would come up with $117,000 because there's 52 weeks in a year and you do this average premium multiplied by 52. And we're at 117,000. This number is slowly growing and growing every single day and every single week. And I love to see it grow. If you look at that as a percent return based off my initial investment of that $152,000, that would be about a 77% return. When the new year rolls around, 2026, I'm going to reset the counter to be whatever the end of year value is. Plus, I might pull out my taxes if the market is green, so that, when it comes April and the market, we don't know what the market's going to look like. I would rather pull it out when the market's green versus when it's red, and then when everyone else is pulling out their money for tax time. Well, we talked about that. Let's head over to the weekly numbers. For the weekly tracker, we're currently at $3,317. That was crazy. I didn't think I was going to make this kind of money for this week. I thought the market was going to be neutral and relatively greenish, but I didn't think it was going to perform the way it is. So I'm pretty happy with how much premium and, just profit I'm generating from my options, my buy calls, and then also my selling options. Pretty stoked about that. Also, guys, what is it? 13 weeks in a row where we hit the 4-digit club. I'm super excited about that. The process and the trading plan is working. We're staying consistent, and this is what consistent wins look like. Consistent 4-digit weeks. And then heading over to December numbers, they're going to look exactly the same as the weekly numbers because we haven't finished the full week. But I'll reiterate it. We made $3,317 in December, and it's only been about 2 trading days. So I'm excited about that. And let's talk about the yearly tracker one more time, highlighting it. We are close to $77,000. We are on the cusp of hitting that $80,000 mark. Very excited. Yearly tracker, $76,957.18. Great. We hit all these high level overview stuff. The monthly tracker, we hit the 5-digit club, 3 months in a row. Hopefully December, I can also hit that 5-digit club, make it 4 months in a row, and keep this trajectory going and this momentum going. But let's head over to Robinhood and let me talk about what I plan on doing for tomorrow. We are back at the Robinhood screen. Let's dive into my buying power and let's talk about the cash secured puts. Right now, because I got rid of my Meta buy option and then my QQQ buy option, my buying power shot up like $40 more thousand. It's kind of crazy. So if I really wanted to buy, like 1,000 shares of QQQ, I definitely could, and I could be wheeling and dealing a ton of money right now. But ideally, that's a little irresponsible if you were to ask me. But it would be kind of cool, maybe for like a week. Just kidding. No, we don't do that here. Let's take a look at the buying power. Right now, I have about $34,000 of margin that I'm actively using. One of the Tesla covered calls I would consider is the margin, and I'm trying to offload it, but I'm not going to offload it at a loss. I'm just going to wait for it to recover, get my cover call that it is at the lowest mark at the 440. Hopefully it gets assigned away at some point in time, and then it will free up that capital. So let's talk about cash secured puts. The way that cash secured puts work, and another term is called collateral secured puts, is Robinhood allows you to run these types of trades up until your cash value. Because my account is about $225,000. If you add this $34,000 to this $54,000, that's about $190,000 that Robinhood is willing to basically borrow against my cash and the stocks I currently owed. So therefore, when I run cash secured puts, they don't incur a interest charge or a margin cost because I am borrowing against my own shares. So you can't really get interest rate on borrowing against your own shares. If I bought 100 or 200 or 300 shares outright, then I would incur that margin cost. But if I'm running cash secured puts, it's basically borrowing, or collateral secured puts, it's borrowing against my own account. So with $154,000, I could run one cash secured put. I just call it, or one CSP for QQQ, one CSP for the SPY. And I think I have enough money to run a CSP on Amazon or maybe an Oracle. So tomorrow, Wednesday, we might take opportunity if there's opportunity to be had. So let's take a look at what some QQQ CSPs look like. Right now, market's looking good, 623.75. Let's head over to trade QQQ options and let's hit the sell put button expiring tomorrow. And for my CSPs, you guys know me, I like to keep a range somewhere between 0.2 and 0.3. So let's look at about $3 away at this 620 if that's within our wheelhouse. Now let's go a little bit further down to the 619. 619, we finally hit that threshold. It's about $109 of premium, and I definitely like that number. But ideally, for my CSPs, I like a better strike price versus the amount of premium paid up front. So for 618, let's see what this delta is. A 0.24, like a 24% chance of this executing almost 25%. Ideally, this is what I like. $87 of premium. Investor pays you up front. Only thing I need to bring to the table is about $61,800 of collateral, and we're going to make this deal. I'm pretty excited about it. So for tomorrow, I'm going to look at this delta. That delta looks good. That premium looks good to me. That strike price looks good. But that's going to be totally dependent on what the market gives me. If the market stays exactly the same at being at this 623.55 or in the green direction, I might even push this 618 and maybe push the strike price a little higher to 620, capture a little bit more premium and run the option that way. But if the market's red tomorrow, I might have to go lower in my strike price, maybe choose a 617, 616. So it really just depends on what the market gives you. But a good rule of thumb, whenever the market opens, choose a delta of like a 0.25. That's my go-to. Every time I see it, that's the one I usually like to lock in on. So for tomorrow, 618 strike price for the QQQ, bag $87. Now let's take a look at SPY. And the reason why I've been trading SPY lately is I want to spread out my risk. NASDAQ 100 is a lot of technology and information technology stocks, and I want to spread it out to most of the top 500 companies in the United States. It just makes more sense, spread out the risk a little bit. And the premium trade-off isn't that much different. I will say QQQ premium is better, and I will say SPY collateral is a lot higher, but you know, it is a fair trade-off for a little bit of stability and predictability. Looking at the trade SPY options, let's make sure all of the data is correct up top. Sell put expiring December 3rd, which is tomorrow. Let's look at the numbers. So SPY trading at the 682.96. Let's look at about, maybe $4 away. $4 away is a 0.28 delta, about $80. And this is where the delta to premium ratio comes in. For $80, I might consider this 679. Let's take a look at what this 678 is. Delta of 0.22. That might be a little bit too low. It's $60 a premium. I don't know if I want that. Maybe for the SPY, because it isn't as volatile, or the stock doesn't move, the ETF doesn't move as much as QQQ, I would be fine choosing this 679, because I think this 678 strike price is the premium isn't enough for the amount of investment I'm willing to put on the line. So I would probably for tomorrow choose this 679 strike price for the SPY. So between my, $80 of QQQ, $80 of SPY, and $160, cash me outside. How about that? All right. That pretty much wraps up what I wanted to share today, guys. It was a quick video. Just talked about what I did for December 2nd. Hopefully the market stays green and we continue this until the end of the new year. So yeah, guys, stay harvesting, stay locked in. Matt out. I will see you in the next video.